Mr. Rai, good to have you with us. What are some of the current trends that you're witnessing with respect to credit offtake?
I think it is too early to put a number to the credit growth, even though we are expecting a credit growth of about 6% by the end of the year. I think the second half of the year will give some trend on credit growth. As of now, we have shown a growth of only 2%, but then second half will bring better growth.
What about on asset quality? What are your thoughts there? There's been a huge spike in GNPAs due to amalgamations. If you could just talk us through that.
I don't think so. The GNPAs are around 14.95, but more relevant number is net NPA, which has come below 5. We are around 4.97. So there is a substantial improvement in provision coverage ratio, which is close to 80% now. Even tangible provision coverage is around 70%. So I think asset quality improvement is substantial as an amalgamated entity.
Mr. Rai, good morning. Wanted to understand what your guidance is on your cost to income ratio going forward.
Cost to income will be around 45%. This time actually there were certain costs which came in, that's why it is around 48. But then I think it will stabilize around 45.
Okay, and given the low cost of funding environment and the adjusted lending rates, what is the outlook on your margins?
Our net interest margins will be in the range of 2.5 to 2.6. I think for this year that looks more stable because low cost funding is there, but then the interest rates on advance also is coming down substantially because portfolio is shifting to external benchmark linked rate also. So both the sides it is coming down. So the net interest margins will stabilize around 2.5 to 2.6 for this year.
So what is the update on how the moratorium bucket at Union Bank is faring? What are the latest trends that you're observing here?
Yeah, the moratorium book is 28% as of 30th June. But I think since the moratorium is going away in the month of August itself, I think this is not a number which is very relevant now because as we enter September, so I think the customer behavior, particularly on the personal loan, will be more evident. So I think this will change substantially. So I think moratorium numbers are not indicating the level of stress actually. So it is because everybody availed it. It is not that they are not capable of paying, but as a prudent measure, a lot of people avail. But as we hit September, we'll have a more clear picture of customer behavior.
Mr. Rai, where are you seeing green shoots with regards to lending?
I think the first push will come from infra. Already we have a lot of project in pipeline. So a lot of road projects and other city gas distribution and other things are coming up. So I think that is the first sector to take off. And the second should be housing. We are seeing that actually traction now, maybe in the tier 2, tier 3 cities to start with, but then that should also take off. So I think slowly other sectors also will come in. Actually, manufacturing industries will take some time to show credit growth. Actually, they're slowly coming back to good activity, but then the credit offtake will go to third quarter and fourth quarter. So it should start with infra. That is my call.
And which are some of the markets you'll be focusing on for future growth?
We are focusing on all aspects of all sectors. We are strong on infra, we are also strong in retail, we are also strong in MSME. So far as being a large bank, universal bank, so all sectors are very important and the focus will be on all sectors. There is no specific sector we will focus on. So, but depending on the potential, our focus will go to that sector.
Finally, what has been the impact on your fee and other income? Do you think that for some time it could remain subdued?
I think the first quarter, the impact was higher. So second quarter, we are already seeing some stabilization in fee-based income as the people are moving and the activities are coming back, the trading has started. So I think the second half will be very, very stable. That's what we feel. I think maybe the fee-based income and all that should come back to normalcy by Q3. Q2 also will see some improvement, but Q1 was bad.
On that note, thank you so much for taking time out and joining in, giving us a clearer picture of your cost of funds, the traction that you're seeing within segments, as well as the outlook on your credit growth. That's the word coming in from Union Bank, the management speaking with us.